Thank you very much. I appreciate it. All right, well, I'm joined now by a lawmaker who's been a leading opponent of the $700 billion financial bailout. He's also the ranking Republican member of the House Committee on Oversight and Government Reform. We welcome him in. Representative Darrell Issa of California. Good to see you, Congressman.
Good to be back on.
All right, so let's...
And in studio.
And you like this?
I do.
This is pretty cool. Okay, well, we have a lot to digest this morning, and part of this is what the future will look like for TARP and the capital injections in financial institutions. Are we crossing the line here?
Alexis, we've been crossing the line since the day we were told TARP would be used one way, which was never used. And what we're really doing now, by leaving Treasury in the business of being a day trader in decisions, is we're completely eliminating the term transparency. You know, in Washington we say transparency, transparency. Look, if we don't know what is the open, objective offer to people who have received money who may want to get out of it, we don't even have the fundamental of transparency, which is tell me what the deal is. Whether you're a large bank, a small bank, or another financial institution, what is the price of leaving TARP? There isn't one price. So you can't even begin having transparency when they won't tell Congress what they're willing to do to people who would like to pay back 100 cents on the dollar with interest to the American people and save us the losses that it appears as sooner or later they're going to have.
I'm baffled by this. I'm frustrated, baffled, as I think many Americans are, and I think the financial institutions who are healthy and willing to pay back the money are just as frustrated too, because we are creating a system here, a concept whereby failure is not an option. Why can we not differentiate who the winners are?
Well, we are picking winners and losers, but more importantly, it appears as though the money pushed out of Congress quickly with very little oversight wants to be kept out of Congress. You understand, if they pay the money back, it goes back to the Treasury, Congress says fine, tick that off, that's the end of that. The administration would have to come back to Congress. As a matter of fact, even foregoing...
to get that money back.
To get the money back. So the first thing is government power transferred to the Treasury is essentially given back if it's paid back and returned to the Treasury. That appears as though they don't want to lose their walking around money. Secondly, the Obama administration has openly said that they want to see money used to help people get into homes. Well, in a sense, what we're seeing is the likelihood that this money is going to end up being used to finance social welfare programs and not returned to us.
Okay, let me play the devil's advocate, because this whole story frustrates me a lot. But there are some who suggest, and I sat down with Lauren Summers a week ago, who say, wait a second, we don't know how much more problematic this economy could get, particularly the consumer right now. We saw the credit quality kind of numbers that came out of Bank of America. We've seen it at JP Morgan and at Citi. And look, we've seen some financial companies today really miss on the numbers. What if the risk isn't well thought out, and perhaps that the stress test is a way to make sure that we don't have another major double dip where they have to come back for more money?
Well, first of all, we stress test banks as part of bank regulation. So the idea that stress testing is new is absurd. Non-bank entities, in many cases, have not had stress tests. So the one disingenuous thing we're getting is this idea that stress test. The truth is that the stress test is going to be announced. In banking, banks are never exposed to what we know about them being done. You understand what it must be like to be a bank executive knowing that even though you think you're healthy, you'd better do what this administration wants, or you may be outed for, quote, not being quite there. It is one of the most outrageous parts of the entire TARP program, is the idea that we're going to begin telling the public whether to be afraid of a bank or not, whether in fact we may pull the plug. If we don't start treating banks in a historic way again, first of all, letting them give the money back if they don't need it. Second of all, allowing the regulators to regulate in the institutionally successful ways, we're going to be a nationalized, micromanaged banking system for years to come.
Is Elizabeth Warren's analysis going too far, or is she on the mark on some of her points?
I think the important point here is that we need to make sure that you stick to private is private. And if the government's willing to do that, great. On the other hand, our biggest part of the analysis is the part that should be public, which is what is the deal with the American people's money so that Bank of America or Wells Fargo, who want to return money, can. And last but not least, profits being down. We're not talking about huge losses. We're talking about free cash flow still being positive and profits being down. This is not GM, Ford, or Chrysler. These are not companies with a disaster looming. These are positive companies who are going to go through some hard times. Of course, we knew that. That wasn't the real...
They've got a record amount of deposits. They have record levels of capital injections, record reserves. Okay, well, I'm thrilled to say that you're going to be here with us throughout the morning, and I'm going to see you in a little bit more, so we'll talk about that in just a moment, Congressman Issa. Thank you very much. All right, well, a programming note. I want you to stay with Fox Business this morning because Timothy Geithner is going to have some testimony later on this morning.